We saw a bit of a spike in oil prices after OPEC production cuts. Spiked about $10 a barrel from where we are right now, but it's kind of settled back to where we were before that spike. So how does that impact these two companies?
Yeah, clearly there are fears on recessionary forces driving lower demand. Lower demand drives lower prices. And obviously, we're coming from an extremely strong commodity price environment through 2022. So energy performed very, very well last year, and Exxon and Chevron participated in that. But this is a more moderate environment than what we saw in the last 12 months. So that will definitely weigh on earnings for this year.
So that spike, it does impact the refinery business and refinery margins. Which one of these companies is more exposed to that?
So Exxon is the largest refiner among the global integrated. So it's 4.5 million barrels a day of refining capacity, or more than 2 times what Chevron has. That's actually one of the reasons why we upgraded the stock last year. We thought refining margins would be very strong, and that played out. Q1, the report we'll see in about an hour's time, should be extremely strong as well. But actually, as you're looking into the second quarter and beyond, refining margins have definitely moderated close to mid-cycle levels.
You know, since the start of the Ukraine war, natural gas was supposed to be a big story. You know, even this year, natural gas. However, we have seen a warmer than expected winter, both here in the U.S. and in Europe. Looking at natural gas prices down almost 50% year to date, which of these names has more exposure and could be more negatively impacted by that?
Both have a reasonable exposure to U.S. gas prices. I would say at the margin, Exxon is higher. You know, as big Permian producers, you tend to produce a lot of gas associated with that oil, so that will weigh on earnings as well. There is some weakness also in the international market. We've seen LNG prices come down quite a lot, and that will also impact Exxon and Chevron. So I think overall, what we're looking at is from a very, very high base. In terms of earnings strength, both of these will moderate, but Exxon's likely to moderate a little bit faster because of weaker refining margins.
All right, Biraj, I want to give investors some insight. So between the two of them, before this earnings print, which one would be your pick?
Honestly, I think expectations are quite high for both. I think Exxon, as you mentioned in your initial comments, is close to all-time highs. What you've seen so far through reporting season is that even the beats, even the strong sets of results are being sold off because I guess investors take the view that Q1 is as good as it gets, and then earnings will fall through the rest of the year. So it's tough to see in the short term for both these companies to push on from here. Fundamentally, we prefer Exxon over Chevron because of the medium and long-term growth opportunities that it has. But I do think expectations are quite high heading into this result.